Hello there, savvy minds. Today we dive deep into the realm of UK politics and economics, where the inheritance tax has become a hot topic. In the heart of the United Kingdom, the inheritance tax, often seen as a death tax by many, is stirring up quite a controversy. This tax, levied on the estate of a deceased person, has become a political chess piece wielded with strategic intent. But at what cost? Inheritance tax serves a dual purpose. On one hand, it's a tool for wealth redistribution, an attempt to level the playing field and bridge the wealth gap. On the other hand, it's a significant source of revenue for the government. However, the question that looms large is whether this tax is being weaponized for political gains. There's a school of thought that argues this tax is a fair way to prevent wealth from being hoarded in the hands of the few. It ensures that each generation starts on relatively equal footing, promoting economic mobility. Conversely, there's a counter-argument that this tax is punitive, disincentivizing wealth creation and stifling economic growth. Critics argue that it's a tool used by politicians to pander to the masses, often at the expense of economic fundamentals. The economic implications of this tax are far-reaching. It influences investment decisions, impacts estate planning, and can even shape the economic landscape of the country. But let's not forget, at the heart of this debate is the human element. Families grieving the loss of a loved one suddenly faced with a hefty tax bill. It's a delicate, balancing act, one that needs to be handled with care and sensitivity. Now, is this a smart move or a political game? Let's delve into the details. Switching gears a bit, let's examine another intriguing financial matter: the cost of the British monarchy. The financial structure supporting the British Crown is quite an intricate one, with a central pillar known as the sovereign grant. In the financial year of 2021 to 2022, this grant was set at £86.3 million, roughly equivalent to $108 million. This sum covers an array of expenses, from property maintenance and payroll to travel and events. Yet this is merely the tip of the iceberg. The total annual cost of the monarchy, as estimated by Republic, an organisation advocating for an elected head of state, is a staggering £345 million, or $431 million. This figure includes additional costs not covered by the sovereign grant, such as security, which some critics argue is an underestimated burden on taxpayers. On the other side of the coin, we have the supporters of the monarchy. They claim that the British royal family brings in financial benefits that far overshadow these costs. In 2017, these benefits were estimated at an impressive £1.77 billion, or $1.95 billion. This income is generated through various channels such as tourism, trade, media and the arts, with the royal family serving as a global brand that endorses other brands and contributes significantly to the economy. As we consider these figures, the question that arises is whether the benefits truly outweigh the costs. Are the critics right in stating that the monarchy is an outdated and wasteful institution? Or do the supporters have a point in their claim that the monarchy is a significant economic asset? This is a complex, multifaceted debate, one that's intricately tied to the future of the British monarchy itself. So, do the benefits outweigh the costs? It's a complex, multifaceted debate. Now, let's take a closer look at the economic benefits the monarchy is said to bring. Supporters argue that the monarchy brings in a hefty sum, estimated at £1.77 billion in 2017, through various channels. Let's break that down. Tourism is a significant contributor, with royal residences attracting millions of visitors each year. Trade is another area where the monarchy is believed to have an impact, with royal endorsements known to boost brand recognition and sales. Media and the arts also play a part, with the royal family's high profile generating interest and revenue in film, television and literature. Beyond these tangible avenues, the royal family is seen as a global brand in itself, endorsing other brands and contributing to the economy in less direct but still impactful ways. It's clear that the monarchy's economic influence is vast, but is it worth the cost? As we wrap up, let's ponder on the future of the monarchy under King Charles III. King Charles has made headlines with his plans for a slimmed-down monarchy, a move aimed at reducing the reliance on public funds. This is a significant shift, reflecting the changing economic landscape and the need for the monarchy to justify its cost to the public. But what does a slimmed-down monarchy look like? It could mean fewer members of the royal family receiving public funding or a reduced scope of royal duties. It could also mean a more transparent and accountable system of expenditure. However, these changes come with their own set of challenges. The monarchy will need to navigate the fine line between maintaining its traditional role and responding to public demands for accountability and value for money. And perhaps most importantly, the monarchy will need to demonstrate its usefulness. Is it enough to be a global brand and a draw for tourists? Or will the monarchy need to play a more active role in society and the economy to justify its cost? The future of the monarchy hangs in the balance as economic realities and public sentiment collide. Before we go, a quick note. If you've enjoyed diving deep into the world of economics and politics today, make sure to hit that subscribe button. We'll keep the insightful discussions coming, covering all things fascinating. Stay savvy, stay informed, subscribe now, and never miss a beat in the world of economics. Until next time.